Hi, I'm TaxMax. Let's break down today's tax topic.
Quick tax fact. HMRC doesn't calculate corporation tax bills for companies. The company does it itself. Corporation tax in the UK operates under a system called Corporation Tax Self-Assessment, often shortened to CTSA. Under CTSA, it is the company's responsibility to calculate how much corporation tax is due, report that figure to HMRC, and pay the tax on time. HMRC does not issue an assessment telling the company what to pay in advance. Instead, HMRC checks the return after it is filed and can challenge it later if necessary. This system applies to UK limited companies, overseas companies with a UK taxable presence, and clubs, cooperatives, and other unincorporated associations that fall within the charge to corporation tax. When a company first comes within the charge to corporation tax, it has a legal duty to notify HMRC. This notification normally must be made within 3 months of the start of the company's first chargeable accounting period. The same obligation applies when a previously dormant company resumes activity or a company otherwise comes back within the charge to corporation tax. HMRC will usually issue a formal notice requiring a company tax return. However, even if that notice is not received, the obligation still rests with the company. If no notice arrives, the company must notify HMRC in writing within 12 months of the end of the period in which it became chargeable. A company must file a company tax return if it receives a notice to deliver one from HMRC. This notice is often referred to as a CT 603. The CT 603 specifies the period for which the return must be filed, known as the specified period. The specified period will not exceed 12 months, usually matches the company's period of account, and may be incorrect if HMRC's records are out of date. If a company changes its accounting date and does not notify HMRC, it may receive filing notices for incorrect periods, increasing the administrative burden and the risk of error. For corporation tax purposes, an accounting period can never be longer than 12 months. If a company's accounts cover more than 12 months, the period must be split into 2 chargeable accounting periods, the first covering the first 12 months and the second covering the remaining period. A separate company tax return is required for each chargeable accounting period, even though there may be only one set of accounts. A return is required even if the company made no profits or made a loss. The normal deadline for filing a company tax return is 12 months after the end of the chargeable accounting period. However, the actual filing deadline is the latest of 12 months from the end of the return period, 12 months from the end of the accounts period where accounts are no longer than 18 months, 30 months from the start of the accounts period where accounts exceed 18 months, or 3 months from the date HMRC issues the notice requiring the return. This means a company will always have at least 3 months from the filing notice date to submit its return. A key practical point is that corporation tax is usually payable before the return filing deadline. A company tax return consists of more than just the CT 600 form. To be treated as properly delivered, the return must be filed online and accompanied by the CT 600 form, all required supplementary pages, the company's full accounts, a corporation tax computation, and any relevant claims, elections, explanations, or reports. If any required attachments are missing, HMRC may treat the return as not delivered, which can lead to late filing penalties. The CT 600 also includes a declaration confirming that the return is complete and correct to the best of the knowledge of the person submitting it. Some companies must complete additional supplementary pages alongside the CT 600. These include close company loans pages, group and consortium relief pages, controlled foreign company pages, research and development pages, residential property developer tax pages, and avoidance scheme disclosure pages. The requirement to submit supplementary pages depends on the company's activities and tax profile. In some cases, final figures are not available by the filing deadline. HMRC will accept provisional or estimated figures where the return is filed on time. Reasonable steps have been taken to be accurate. Estimates are made to the best of the company's ability, HMRC is told that estimates have been used, and an explanation of how the figures were calculated is provided. If actual figures later become available or an estimate is no longer reasonable, the company must update HMRC. Once a return is filed online, HMRC records it as received and carries out basic automated checks. HMRC has up to 9 months from the actual filing date to correct obvious errors and the power to open an inquiry within statutory time limits. The company has 12 months from the filing deadline to amend its return. After those windows close, figures can become final, subject to HMRC's inquiry and discovery powers. Companies required to file company tax returns must keep sufficient records to support the figures reported. These records must normally be kept until the later of 6 years from the end of the return period, the date any inquiry is completed, or the date HMRC can no longer open an inquiry. Records include receipts and expenses, sales and purchases, and other documents needed to demonstrate accuracy. HMRC's systems distinguish between live and dormant companies. Returns are normally issued only to live companies. If a company becomes dormant, it is advisable to notify HMRC so that filing notices are not issued unnecessarily. HMRC may issue periodic checks asking the company to confirm whether it has remained dormant. In summary, corporation tax operates under self-assessment. The company is responsible for accuracy and timing. Returns are required even with no profit. Filing deadlines vary by circumstance. Supporting documents matter, and records must be retained. Getting CTSA right is fundamental to avoiding penalties and disputes. Why did the tax return bring a notebook? Because it didn't want to forget the details.
Educational content only, not advice. Rules can change.